Hello, everybody. Good afternoon. This is Mariko Takei from Cushman Wakefield, Japan. Today, our topic is a great time to invest in Australian office sector. We are welcoming Mr. Chris Cheah, Executive Chairman of Trust Capital Singapore. This is my pleasure to introduce our speaker today, Mr. Chris Cheah, Executive Chairman of Trust Capital, a leading private real estate firm headquartered in Singapore and widely recognized for its deep expertise in Australian real estate since its incorporation 16 years ago. Trust Capital has completed more than 4 billion Australian dollars of transaction in Australia and was notably most prolific Australian investor in the Australian office sector between 2011 and 2016. Trust Capital's track record speaks for itself. Its Australian Office Fund 1, established in 2010, and Australian Office Fund 2, established in 2013, achieved IRRs of 11% and 24%, respectively, upon exit in 2017. More recently, in 2022, Trust Capital completed a landmark purpose-built student accommodation transaction involving a sovereign wealth fund acquiring a 49 stake in an Australian portfolio valued at 1.1 billion Australian dollars, which was successfully exited in 2024 at the IRR of 35%. Trust Capital's investor base includes sovereign wealth fund, pension fund, insurance companies, listed corporate and private funds, underscoring its institutional confidence in its strategy and execution. Prior to Trust Capital, which was ANZ Bank, where he spent 16 years and held the role of head of property Asia. During his tenure, he was instrumental in establishing ANZ as a leading bank financing and advising major Asian investors into Australian real estate. Please join me welcoming Mr. Chris Cheah. Hi, Chris.
Hi, Mariko-san.
Hi.
Good to see you
Good.
again.
Yes, good to see you.
And thanks for
Yes.
listening to us on our previous visit recently to Tokyo.
Yes, that was very nice. Yes.
Thank you.
I was very convinced by your strategy.
I hope.
And yes. So today I prepared 5 questions for you.
Mm-hmm.
Can I start with my question?
Yes, please. Thank you.
Yes. First question. Australia as a long-term strategy. You have consistently positioned Australia as a core market for Trust Capital. Why you regard Australia as a strategic long-term investment destination, particularly for global and Asian investors?
That's a good question, Mariko-san. Well, to us, whenever we invest, the macro has to come first. We look at the big picture. Yeah. So Australia, in our view, is a very attractive country to invest. And that is basically because if you look at globally today, we all believe that Asia is a major growth region and will continue to be a major growth region. Then we look at Australia. Australia is highly complementary to Asia. Their exports are mainly to China, India, Japan, South Korea, and Southeast Asia. So from that perspective, if Asia were to grow as we all expected, Australia will be a major beneficiary. And what we always think is that not just that, but you get the growth without the corporate governance and sovereign risk that one has to, encounter when they invest in Asian countries sometimes. The other thing is also Australia is attractive from a demography perspective. The country, although the population is not that big, however, it's such a wonderful country that people are queuing up to get in. Yeah,
that is right.
Yeah. So annually, Australia has a population growth of plus minus 2%. And the projection for the next 10 years is around 11%, which is very rare for any developed country. And the other thing is the quality of the population growth, because
Mhm.
these are net inward migration, which
Mhm.
immediately they can contribute to the economy. Immediately they can basically uh, consume goods and services. And for a real estate perspective, which we are in real estate business, they will create demand for housing, they will create demand for logistics, properties and office and so on. So from a demographic perspective, it's very good. And the third point, which is something which is very impressive, the Australian government generally is quite disciplined. And if you look at the net debt to GDP of Australia compared to many other countries, it is very manageable. I think it's plus minus around 30%. Yeah. So if you look at all this, then Australia to us is basically for TrustCapital, we call it strategic long-term investment destination.
Yes, thank you. And what about the real estate market itself and also for the institutional investors? Isn't it a very developed and mature country as in real estate market, is it?
Yeah, that's another very good question because Mariko-san, I was very fortunate that I live in Australia for 10 years. I studied in University of Queensland. I'm an Aussie chartered accountant. That's around 10 years. And I worked for ANZ Bank in Asia for
Hmm.
16 years, which gave me the opportunity to look at Australian real estate very closely.
Hmm.
And, uh, and now in this business for 16 years. So the Australian real estate market is very, very disciplined.
Yes.
And something which a lot of people are not aware of. People just thought of Australia, oh, got plenty of land, so they can keep on building and building. It's not quite true. So what happened was in the early 90s, there was a property crisis.
Hmm.
And since then, the Australian banks have been very disciplined. So what they do is very simple, is economics 101. Unless there's demand, they don't lend money to provide the supply. So if you want to build residential properties, unless you pre-sell 60% thereabouts, they don't lend you money. Unless you have 60% lease for your office properties, they also generally don't lend you money. It doesn't matter who you are, but if you want to borrow from the banks, that's how they behave. And because of that, since
Hmm.
the early 90s until today, Australian economy has been very stable thanks to
Hmm.
liquidity in the real estate side. And believe it or not, at the current moment, occupancy for residential, for logistics is very, very high. Maybe, 98% to 100% even. And for office, it's supposed to be a weak market today, but
Hmm.
the occupancy is still around 85%. So because of that, we believe that this is a market that is very safe to invest in. Yeah.
Thank you very much, Chris. And our next question is about timing of the office market. It's been 8 years since Trust Capital last exited in Australian office market, yet you are convinced that now it's an opportune time to return. What has changed? And why do you believe this is a great time to invest again?
Thank you, Mariko-san. So I think we go back a little bit further. When we entered the Australian market around 2011, 2012, it was straight after global financial crisis. And when we went to invest, hardly anyone was there. And
Hmm.
therefore, we could buy 8 office buildings for 1 billion. And we bought from big boys like Lendlease, Investa, and so on. So we did very good buys. And in 2017, when we exited, our 7 properties attracted 300 bidders. Yeah, 300 bidders. And we sold to people like Goldman Sachs, AEW. And in Japan, we sold to Mitsubishi Estate. We sold 2 properties to Mitsubishi Estate. And of course, from Korea, we also sold to Mirae Asset Management. So I think for the Australian market, the property market is very sensitive to interest rate. And because of that, we when we exited in 2017, we actually felt that the market was quite hot. And just imagine if you sell 7 properties, 300 people trying to buy 7 properties, it's time to exit. Now, 8 years later today, we are seeing similar situation to when we first enter. We just acquire 1 property, which I can talk about it later. But the key thing is that when we see very little competition, that's a good sign. But the thing is also interest rate in Australia, the Reserve Bank cash rate in 2022 at the beginning was as low as 0.1, and subsequently went up all the way to 4.35. And last year came down 3 times of 25 points each to 3.6. When it was 3.6, it signals time to buy because we expect the peak of the interest rate cycle has been reached, which means the bottom of the real estate cycle. So that signals for us to go in. But of course, I think this week, Reserve Bank of Australia has increased interest rate by 25 points. Having said that, I still feel that you have to take your hat off to the Reserve Bank of Australia because they have a mind of their own, and they always look at the long-term benefit of the country. By doing so, inflation will be nipped at the bud, and then I'm sure when things have settled, their target is 2 to 3% inflationary rate. I believe they will ease the interest rate in due course. And as a positive investor, of course, we take it as a positive thing, which means that we will have more time to buy. If they trade quickly, then everybody is happy, nobody is selling, then we have nothing to buy. But we always take a long-term view to business. Although interest rate is going to be a bit more expensive, but that's short-term. Long-term, still comfortable. And we look at the overall economy of Australia, which is still very strong. Why again it's time to buy? Well, we just bought 1 property in Melbourne, 750 Collins Street, which is tenanted by Monash, which is AA1. And this property,
is that at Monash University?
Yes, the REIT is Monash University. And by the way, Mariko, we did this deal with your colleagues in Melbourne, Lee Melbourne and Nick Rockover. Yeah, I promote them for you.
Thank you.
So it was a very good transaction, and that transaction sort of confirmed our thesis that it's a good time to buy.
Yeah. Can you also explain a little bit of this Monash University?
Yeah, so
and also the investment thesis and investment strategy you have.
Yeah, so this property, there are certain things we need to keep confidential because it's not public info. But we like this property because it is how do I put it, tenanted by Monash. And although it was an office building initially, but after spending 155 million on the fit outs and all that, is converted into a student campus. 5,000 to 6,000 students study there a year. And we actually bought this building for 383 million, which we think is quite a substantial reduction over its peak value, which is more than 500 million. So we have 10-year lease remaining tenor to Monash, which is AA1, and our projected cash on cash distribution, we are looking at around 7% per annum. and
Mm-hmm.
IRR of around 10 to 12, which I think for a double A1 risk, this is very attractive. And not to mention, in our view, university generally don't move. Yeah. So and after spending 155 million, they signal the fact that they are not going to move. Of course,
Mm-hmm.
not all come from them, partly come from the vendor as well. And
Mm-hmm.
yeah, so the university, we are very happy to have done this transaction and with your help, Cushman and Wakefield.
Thank you very much. May I ask a little bit about the capital raising journey you have? Trust Capital recently launched for the office fund. Could you share some more high-level terms, the fund investment strategy, and where you are at the capital raising journey?
Okay, thank you. So big picture wise, we are looking to raise half a billion Aussie
Mm-hmm.
dollar to invest in 3 to 4 buildings in Australia for about a billion. And we are targeting buildings that are more than 300 million because
Mm-hmm.
we feel that it will be more meaningful for the big boys to sell big assets to, I suppose, recycle capital and so on. And then on our part, we would like to think that for assets above 300 million, there'll be lesser competition. Yeah, so and also as we have experienced previously, we believe the market will come back, and when the market come back strongly, institutional investors will prefer to buy larger assets as well. So it's
Sure.
pretty straightforward. Yeah. And yeah, so far we have already raised about 250 million. And our
Mm-hmm.
recent trip to Tokyo has been very, very promising. Since our trip, about 3 to 4 major Japanese investors are inspecting the property. One last week, two more next week, and I'm going down next week. And that's another one. Yeah. So it is very, very exciting. And we hope more Japanese investors will come along with us and with your help. Thank you.
Thank you very much. Oh, yeah, and I think this is a very good return. And the final question is that of you mentioned that Trust Capital is particularly well positioned to execute this strategy in the current market environment. What differentiates Trust Capital, and why do you believe it's one of the best platform for investors at this point in this cycle?
Okay. Yeah, the cycle is very important point. To be frank, wherever you go to invest, the locals are always the most capable, with the strongest track record and so on. That's normal. However, in the current environment whereby most of them are not in the market for one
Mhm.
reason or another, maybe because they have got too many officers, maybe because, of valuation and so on and so forth. Uh, is a great time for us because we have a very good track record. We have done over 4 billion of transactions. We would like to think that we have good relationship with a lot of the local players, maybe the vendors plus the agents and so on and so forth. So we are in a very strong position to transact. Plus, of course, we have done a lot of cross-border transactions. We know that when we go cross-border, there are various things like foreign exchange, like structure, and so on and so forth, which we have done, time and again for institutional investors, which we can bring to the table to optimize the returns. So the timing is now, and this is where we can go in and do a lot of good investments for foreign investors into Australia. And Aussie dollar is attractive as well at the current moment.
Thank you very much. And it sounds like a very good deal, and also good luck for the fundraising for the Australian Office Fund 3. Thank you, Chris. Thank you very much. Thank you, everybody.
Thank you so much, Mariko-san. Cheers.
Cheers.
Bye.
Bye.